Um, okay. Good evening, guys. Hope you all had a profitable day. So, I have had a lot of questions whereby people ask me how I trade, like what I look out for before taking a trade, what I look out for when I wake up in the morning. So, I want to do a quick video on what I look out for and how I take my trades in the morning. So, this morning when we woke up during London session. Okay, this is today's candle. I was actually expecting a retracement higher to probably this fair value gap here on the daily time frame. Though we didn't get that, but then I did get a buy. And you having a draw on liquidity doesn't mean that you are actually taking a trade that will take you to that particular area. No, that's not how you actually do it. You just have a draw on liquidity, then you take trades towards that particular zone. You don't need to hold your trade to get to that level because most of the times the market doesn't just trade straight to those areas you have highlighted. So because I was expecting a higher movement, I went to the 1 hour fav- to the 1 hour time frame to look out for the market structure. So when I woke up, it was around here. Like the market was right around here. And then the first thing I would usually do is I mark out the opening price for that day. Please, this is New York time, UTC -4. It is based on New York time. So I mark out the opening price for that particular day, which is this particular price here. That was the opening price for today. So I would usually mark it as um NY midnight opening price. So if I am expecting higher prices, I would usually wait for the market to trade lower, maybe trading into a fair value gap um an order block or sell side liquidity. So either of those three, they are all PDRAs I use. So I would expect price to trade to them. Plus, if you take your Fibonacci from this low from the previous day to the high, to this high here. So I'm using this low to that high. We traded to what 62% retracement level. And if you look at the 62% retracement level, we actually have a fair value gap there at a discount, which we all know is discount. Now this is an order block, but I will be using this particular one, this single candle here. You know, for ICT students, we can use the both these two candles here as our bullish order block, but I prefer the single candle because it gives me a tighter stop loss. So the moment I saw this, the market was right around here and it was kind of consolidating and respecting this fair value gap. It never went below it. So I looked above and I saw this buy side liquidity. These are equal heights. So the market draws to liquidity, and then this was the area I was expecting price to go to. So I went to my channel and I actually gave them um, a buy signal. Though I never said anyone should buy, but I just expected price to give a bullish move. So I went to the lower time frame. Though if you look at this time frame, you would see we have a market structure shift. So this is also something to look out for, a market structure shift on the higher time frame. So we had price straight to equilibrium or to discount, plus we have a market structure shift. Then we had this buy side liquidity. So I went straight to the lower time frame On the 15 minutes, you can see we rejected from this order block. The market came back. This is sell side. If we go to the lower time frame, this looks cleaner. So I would scale down to the lower time frame, to the 5 minutes time frame. Yeah, I think that's better. Okay, so this is the 5 minutes time frame. We had this sell side liquidity here taken out inside the 4 hour, the 1 hour fair value gap. Sorry, inside the 1 hour fair value gap, we had liquidity being created. Now this is also liquidity. So we took out the sell side plus the 1 hour fair value gap. Then we had a displacement to the upside, though we never had a market structure shift around here, because this would have been the market structure shift, but we never took it out. But we had this fair value gap. Now the market came back and retested this other block here. You can see this whole rejection. This is signifying that the market wants to buy. So I took my first entry around here. If you take, you can actually take your entry on the 1 hour. That's completely fine. But then waiting for a lower time frame confirmation is actually better. So I took my first entry inside this fair value gap plus the other block. Then the market give a market structure shift. Market structure shift, market structure shift. You can see this fair value gap. The market retested it, filled it up plus the other block. And we had another displacement to the upside. And you can see how the market kept respecting the bearish PDRAs, like the bearish fair value gaps. This is called an inversion fair value gap because you are inversely using it. Instead of using selling inside here, the market goes and comes back to it. So it's called an inversion fair value gap. And you can see how well this actually played out. The market kept respecting um, the bearish PDRs until we took out this buy side liquidity. That was where my stop loss, my take profit was. My take profit was just above this buy side liquidity. So my trade looked like this. I took my profit right around here. Sorry, right around here. When the market started buying, I trailed my stop loss and my trade looked exactly like this, and it was a 1 to 5.68. Though the market wasn't straightforward, probably because of the news we had here. But then we actually had a nice trade this morning. I actually saw this trade also, but I didn't take it. We had this market structure shifts. After this buy side has been taken, we had, this is a swing low, so we had a market structure shift here plus this buy side liquidity. Please take note, I didn't take this trade. This is buy side liquidity, this is market structure shift, and the market left a fair value gap. And you can see how the market came straight for this lows that it created during London session. So as easy as this. And I hope you learned something from this. Please like and subscribe. Thank you.